This is Commodity Wrap. I'm Tony St. James. Well, we hit a Wednesday, and Wednesday is one of my favorite days for Commodity Wrap because I get to talk to somebody twice on Wednesday. We talk on the TV side every day but Tuesday, and then on Wednesday we talk on TV and then get to do this Commodity Wrap. I'm talking about Brian Hoopes. Brian is the president of Midwest Market Solutions, and Brian, we'll have some contact information coming up in the second segment, but interesting because this is a 4-day trading week and may have a bigger impact on the protein side, the livestock side, rather than what we do on the row crop side. But, man, I looked across the board and there's a lot of green to wrap up Wednesday. Kind of a nice day.
Yeah, good to see the green on our screens almost exclusively, and we can talk about this more later, but it's nice to see the stock market and the cattle markets kind of divorce themselves, and cattle moving sharply higher, stock market lower, so we're not real dependent upon that. It looks like, it was corn and then some of the other grains that kind of shifted away from the tariffs and some of these economic news to more trading just on their fundamentals. And now we're starting to see the cattle market, livestock markets do the same thing. But a lot of buying interest in the grains today. There's forecasts for some decent to heavy rains in that eastern corn belt that just had flooding 2 weeks ago. Certainly could slow down their planting, and I think the market's recognizing that and adding some premium. December corn made new highs for the week today off of that forecast. And then you also look at optimism between the U.S. and China that maybe there's a chance we could actually get a trade agreement in place. China has said they're willing to talk with the United States about a trade agreement under certain conditions, and maybe those will be met, maybe they won't, but at least they're willing to talk, and maybe we can find some sort of a resolution. And also, U.S. dollar sharply lower. I think that ushered in a lot of buying interests across the table of all kinds of commodity markets.
So let's kind of take these one at a time. Corn market, I was kind of wondering there as we were nearing the end of the session whether it could hang on and close in positive territory. And there were a couple of other contracts along the way. I wasn't sure whether or not they could do that. But, as I look at corn here, let's see. The new crop was higher on Tuesday, while the old crop was lower. So I guess 2 sessions now for the new crop in positive territory. And then the other one that kind of jumps out at me is soy oil, as it just continues to move higher session after session with big double-digit gains year to date.
Yeah, that bean oil market has had a decent run, and a lot of that is tied to ideas that we're going to have a new EPA ruling that's going to mandate more biodiesel usage. Now, this kind of the caveat here is we talked about this in a lot of 2024, and a lot of the trade was very bullish to bean oil, and I think they were disappointed almost every time. But we have seen bean oil rallies off the March lows, a substantial rally from our lows in March back up near the annual contract highs for the July contract that I'm looking at. It's one that I think you have to be cautious, but you want to be cautiously optimistic on, I believe.
All right, I'm going to work the conversation about the dollar in right here, and then I'll save the equities for our conversation in the second segment because, again, I think you can take the S&P and take the cattle market and see a lot of similarities there. So we'll tie those in the second segment. Dollar, as you mentioned, working its way lower. Bitcoin moving higher. And then our precious metals, gold and silver, in higher territory. I guess kind of wrapping this segment up, what are thoughts that you have there?
So you look at the gold market, everybody wants to buy gold and push this market higher. A lot of calls for $3,500 and maybe some even higher than that. It's kind of that flight to safety. It's the market that reacts positively when the dollar drops. All that is happening today. It seems like maybe in the last half of 2024, Bitcoin was the hot market to buy, and people were going crazy buying that market, and maybe some of that has shifted over to gold, where this is a market that people just can't get enough of, whether it's the physical gold or even gold futures. But boy, we are just screaming higher in this gold market, and I don't want to say this is a blow off top or anything like that, because I think with this uncertainty that we are seeing surrounding the tariffs and the dollar index, and tariffs usually are bullish for gold because it's bearish for the U.S. dollar. So as long as we have this uncertainty in these tariffs, gold is probably going to be a featured buyer. If we start to reach some agreements, particularly with China, there's going to be a huge day of profit taking in that gold market.
All right, let's take a break. We'll come back. We'll talk proteins and those equity markets as Commodity Wrap continues in a moment. This is Commodity Wrap. I'm Tony St. James here on a Wednesday with Brian Hoops, President, Midwest Market Solutions. Really spent a lot of time on the row crops in that first segment, but Brian, focusing now on livestock and equities. Why have we been watching these two kind of side by side, and maybe more specifically the S&P?
Yeah, since the tariffs and the trade wars really took hold, they have been trading almost identical. Whatever the stock market did, the cattle market did to a T. If we were down sharply in the stock market, you could guess the cattle would be doing the same thing, or vice versa. If the stock market had a good rally, you knew the cattle market would have one as well. But today was a different story. We talked on TV this morning with the stock market being down in the overnight. Very likely we'd see some weakness in the cattle market to start today, which we did, but it didn't take long, and cattle started to find its own independent strength while the stock market stayed lower and continued to drift lower, and is probably double the losses of what we saw in the overnight trade. We've seen cattle market overcome early weakness, several 100-point higher gains today. Very strong day in this cattle complex. We haven't really seen any cash cattle trade yet. We have a cattle on feed report out tomorrow that looks to be somewhat friendly, with very tight on feed supplies being confirmed once again, but placements slightly larger than a year ago. But the only bids I've been able to find at midday is 328 in Nebraska, which would be kind of steady with a week ago. So packers, I think, are trying to buy the cattle cheap, but with 3 days of advancements in the futures, they're not going to be able to buy these cattle at a discount. Steady money now, maybe $2 to $3 higher is what we're seeing for some calls once we start trading, which probably could occur Thursday or even on Friday of this week.
All right, let's move over to the hog market. Again, pretty impressive here. Well, let me back up. Live cattle futures, 4 sessions higher. Feeders up 6 of the past 7 sessions, and hogs up 6 consecutive sessions. Are hogs on the coattail here, or fundamentally do they have their own story?
I think they were definitely originally under some pressure, especially with tariffs going against China, because China is one of our biggest buyers of U.S. pork products. To see them have tariffs in place that mean that they would import less product set a lot of selling pressure against those hogs, but we've rallied almost $10 off of the lows that we posted a week ago, as the hog market has again kind of focused more on fundamentals, near-term cash markets, cutout values, exports to other countries, rather than just focused on these tariffs. I think the market really understands that these tariffs are a marketing tool that can be changed at any at a drop of just a drop of a tweet. They can change any time, and they will. And a lot of these countries are working on new trade agreements, which means better opportunities longer term for our producers of pork and beef, our farmers, our dairy farmers, grain farmers. Hopefully this ends up with better trade agreements for them. It's a short-term pain, but a longer-term benefit, longer-term gain, I think, coming down the road after we get through all of this negotiations.
All right. Final thoughts here on how about the energy markets? West Texas Intermediate moving higher, RBOB moving higher, and nat gas futures were a bit lower on Wednesday. Are these tied back to tariff talk as well?
Yeah, I think that, a little bit in the tariffs as well. The crude oil, I think, started to rally this morning and has extended the rally on ideas that China is going to maybe try and reach an agreement with the U.S. China's a big buyer of U.S. petroleum products, particularly crude oil. So Chinese demand would push us in motion to export more product. We're certainly producing a lot of product here in the United States. And if we open up these export markets, that's a win-win for everybody. And I think that was kind of the catalyst for these markets moving higher. The EIA report, what it showed us was the stocks were pretty much as expected, maybe a small buildup, but the trade was looking for one anyway, so it didn't really do anything to deter this little rally that we've seen.
All right, Brian, I hinted to this in the first segment, but if we want to visit with you or learn more about Midwest Market Solutions, how do we do that?
Yeah, you can reach out to us. I'll give you my website address where it has a list of all of our offices, MidwestMarketSolutions.com. Or also you can call me directly, 417-501-5132.